Taiwan is one of the world's largest holders of foreign reserves. As of the time of writing, Taiwan holds about $576 billion in foreign exchange reserves, which is a figure that is much larger than many other countries' GDP out there. Furthermore, as you can see in the graph right here, Taiwan has continuously recorded higher foreign reserves every single year. Back in January of 2000, Taiwan only had reserves of about $100 billion, but by 2011, which was 11 years later, had seen an immense rise of foreign reserves amounting to over $400 billion. Comparatively, Taiwan's foreign reserves is also one of the world's largest. Data from the World Bank in 2023 shows that the world's largest holder of foreign reserves is China, with over $3.4 trillion, followed by Japan at $1.29 trillion, and then Switzerland at $863 billion. Unfortunately, the World Bank data does not include Taiwan. The data we gathered comes directly from the Central Bank of Taiwan. But if Taiwan were to be placed in this data set, it would make them the seventh largest holder of foreign reserves globally. That puts them above major economies like South Korea, which has a population and GDP size much larger than Taiwan. Yet small Taiwan has foreign reserves that surpasses South Korea. They would also be above Saudi Arabia, which is a country famous for its oil exports. Taiwan would be far ahead compared to many other major economies out there. However, an article published by Taipei Times in June of 2024, quoting the Department of Foreign Exchange Director General Eugene Tsai, said that Taiwan is actually the fourth largest holder of foreign exchange reserves behind China, Japan, and Switzerland. Now let's understand why. Why does Taiwan have such huge foreign reserves? Is it because of the United States? Did the US help them? Or is it because of their strong economic performance? Well, it's actually because of trade, and that's all there is to it. There's a lot of other factors out there, but trade, specifically international trade, takes it to a whole new level. But what is international trade, you ask? International trade is when a country exports and imports goods or services. Let's take a look at Taiwan's list of imports in 2023. Here's data published by the International Trade Administration of Taiwan. As you can see, the largest imports of Taiwan is electrical equipment, encompassing a massive $107 billion. One of the reasons why this figure is so big is because Taiwan is the world's leading semiconductor hub. They have to buy a lot of equipment for their leading companies like TSMC to function. This is then followed by mineral products at $61 billion, machinery and mechanical appliances at $49.9 billion, and a long list of other imports. Every single year, Taiwan imports a wide variety of products. Here's the graph of Taiwan's total imports since 2009. Back then, the country only imported $174 billion, but in the latest year of 2023, it is now over $351 billion. Now, just like how Taiwan imports from overseas, the country also exports. Unlike imports where Taiwan buys something from other countries, exports happen when Taiwan sells something overseas. A good example of this is when Taiwan exports semiconductors. The country, as we just mentioned, is a leading semiconductor hub. Here's a graph of Taiwan's exports over the years. In 2023, the country exported over $432 billion, which is a big increase from 2009, where it only exported $203 billion. For 2023, Taiwan's largest exports were electrical equipment, amounting to a massive $222 billion. Now, you got to balance these two. The reason for such is because when Taiwan buys something overseas, they are expected to pay for it in US dollars, and the reason why they use the US dollar is because it is the world's reserve currency. So, if, for instance, Taiwan buys equipment for its semiconductors from, say, the United States, the US is then expected to receive US dollars in exchange for that piece of equipment. In the same way, when Taiwan sells semiconductors, they are also expected to receive US dollars. This is where trade balance comes in. For Taiwan to increase its foreign exchange reserves, it must sell more products or services globally than it buys. And that is where Taiwan is at today, and has been for years. Taiwan has been a leading exporter of semiconductors, which has helped contribute billions every year to its foreign exchange reserves. Just take a look at the trade balance of Taiwan. In 2009, Taiwan had imported over $174 billion, but it exported much more at over $203 billion. This then resulted in what is called a surplus. Every single year since the available data, Taiwan has only recorded surplus after surplus. Now, it's not just the exports of goods and services. There are also concepts called primary and secondary income. Primary income is earnings from investments and employment between residents and the rest of the world. For example, in Taiwan, primary income could include earnings from Taiwanese companies' foreign investments, like dividends from subsidiaries or interest on foreign assets. It also includes wages and salaries that Taiwanese citizens earn abroad and bring back to Taiwan. A good example here is TSMC, a company that has investments in several parts of the world. When TSMC earns profits from its overseas operations or receives interest from foreign assets, these earnings are counted as part of Taiwan's primary income. These profits are then brought back to Taiwan and added to the country's so-called current account. However, investments that go into Taiwan also impact the primary income account, as foreign investors who own assets in Taiwan can earn dividends, interest, or profits from those assets. For example, if a foreign investor holds shares in TSMC, any dividends paid by TSMC to that investor count as an outflow of primary income from Taiwan's perspective, reducing the net primary income in the current account. Here's a graph of what this looks like as published by the Central Bank of Taiwan. As you can see, there is more money flowing in Taiwan through the primary income than out. And that's because companies like TSMC generate substantial earnings from their international operations, which contribute positively to Taiwan. The second concept is called secondary income. It involves one-way transactions that don't require something in return. For Taiwan, these transfers could include remittances sent back home by Taiwanese citizens working overseas, which count as inflows. On the other hand, foreign aid or remittances sent out by Taiwan would be outflows. Although the data is quite small compared to trade or primary income, as you can see in this graph right here, the balance on the current and capital account then amounts to this much every single year. In 2023, it is indeed substantial. Now, let's talk about the economic impacts to Taiwan's economy. The first is simple. Taiwan can continuously operate without worrying about its international obligations. Taiwan, unfortunately, has quite a number of external debts. External debt is the total amount that a country owes to foreign creditors, which includes government debt and debts owed by private businesses. Here's a graph published by the central bank. Fortunately, most of the external debt is held in Taiwan from private companies, most likely its largest, like TSMC. In 2023, total external debt is about $206 billion. This debt, unlike any other debt out there, has to be paid. And if that debt is borrowed through US dollars, it is likely that it must be paid back through US dollars. But the good part is that Taiwan's foreign reserves is much, much more than their total external debt. Another important economic impact to Taiwan is that the country has a buffer against external shocks, When there's economic volatility or a worldwide depression, Taiwan's large reserves provide a financial cushion. These reserves can be used to stabilize the new Taiwan dollar if there are sudden outflows of foreign capital. If foreign capital outflows fast from Taiwan, it causes a drastic depreciation of the currency. But due to Taiwan's large reserves, they are more than capable of preventing the economy from experiencing severe currency depreciation. Having a stable currency is important because a stable currency fosters economic predictability, which is crucial for both businesses and consumers. For example, if TSMC's semiconductor exports suddenly faced currency volatility, it could disrupt their global pricing and revenue forecasts. But anyway, do let us know what you think. Thanks for watching.